Good evening, students. Welcome to the live learning classes organized by Board of Studies ICAI. Today's evening, we will continue with this topic, tax invoice, debit note, credit note, and e-way bill under GST law. Last class, we have understood the concept of tax invoice and various forms used in relation to tax invoice. Students, before we start with our discussion, let me have a quick confirmation from some of you. You're able to listen my audio. You're able to see my screen properly. Good evening, Namrata. Good evening, Viraj. Great. So, what I will do quickly, I'll jump to the credit note where we have started our session. Just give a minute. I'll start with the topic called credit note. I'll come to the respective slide and I'll share my screen. Meanwhile, any doubts on the topics we have discussed so far, please post your questions. Yes. So this is a slide where we stopped our previous discussion, credit notes under GST law. Let me see any doubts before we start further. Thanks for the confirmation, Raheen, Geeta, and Shailesh. What we will do, today's class, we will continue with our discussion on the concepts, what we need to cover. The coming class, this Saturday, I'll quickly have one MCQ pattern question and answers on the topics of registration, on the topics of exemption, on the topic of valuation, tax invoice, debit note, credit note, e-way bill. So all 5 chapters, what we have discussed so far. My suggestion, please prepare yourself. We'll have a quick recap and then we will start with our discussion. And to quickly refresh your knowledge and understanding on this topic called credit note, debit note, I'll re-explain this aspect of credit note, debit note once again. Yeah, I'll explain this aspect of debit note, credit note, and then we will come back to our learning. When I talk about credit note, I remember Rahim or some other student asked me one doubt in relation to credit note that we will have a detailed discussion to. Credit note, we can classify into 2 aspects. One is credit note under GST, which complies with the provisions of section 34, subsection 1. Normal, or I will say regular credit note, which we call as financial credit note. Financial credit note. So we need to have a better understanding with respect to usage of this term called credit note under GST law. And for understanding purpose, when value of supply or tax thereupon. Students, my recommendation, please write down this in your working notes. Please make a note of this in your working notes. Value of supply or tax thereupon. If I have to increase, I issue a document called debit note. If I have to decrease, I have to issue a document called credit note. Please write down in your working note value of supply or tax thereupon. For a moment, let us assume that the value of supply is mentioned as 1 lakh and tax thereupon is mentioned as 12,000. As a accountant, we may do a mistake with respect to value of supply or with respect to rate of tax. Anything may go wrong. So if I want to increase 1 lakh to say 12 lakhs, or this 12% what I have charged, if I want to increase to 18%, in this case, I use something called debit note. Alternatively, if I've charged 1 lakh, this I wanted to reduce to say 80,000. Alternatively, if I have charged 18%, I want to reduce the rate of tax to 12%. In this case, I use something called credit note. Section 34, subsection 1 deals with your credit note. Section 34, subsection 4 deals with your debit note. This is what we need to keep in mind with respect to our adjustment of value of supply and tax thereupon. Please keep in mind, when you file your returns, when you raise a tax invoice, it is very much possible for us to do a clerical mistake. So to rectify these clerical mistakes, I have this tool called a debit note or credit note. This is the purpose whereby section 34 comes into picture. Now, section 34, where there is a reference to issuance of a credit note, the provision says that a credit note is issued by the supplier. Please keep in mind, credit note is always issued by the supplier. There is no mechanism where a recipient can issue a credit note. Every word, every phrase matters as a professional chartered accountant. Reason, we once get qualified, we are going to vet an agreement. We are going to read the documents. We are going to give a recommendation to the client. We are going to give advice to the management. Where to agree with the terms and conditions, where not to agree with the terms and conditions. Why do I issue credit note? Where the taxable value or tax in the tax invoice is found to exceed. I found that there was an excess charge of taxable value. There's an excess charge of tax. The taxable value or tax payable in respect of such supply. So there was a error, could be a clerical error or any other reason. Because of that, I can issue a credit note where goods supplied are returned by the recipient. Goods supplied are returned by the recipient. Inward of material, sales return. Probably that could be one reason where I'll issue a credit note. Where goods and services are both found to be deficient. When I say deficiency, sir, I have supplied 100 boxes. Client has complained that they have received only 95 boxes. Now, when there is a shortage of 5 boxes, for these 5 boxes, I issue something called credit note. So here, scenario 1, where the taxable value or tax charge is excess compared to what it ought to be charged. Point number 2, by virtue of goods returned back to the supplier. Third, by virtue of deficiency. These are the only 3 reasons where a credit note under GST can be issued. This is what we need to keep in mind. Now, sir, is this applicable for services? Answer, yes. This is applicable for services. This is applicable for services, where services are deficient. Sir, how can there be a deficiency in service? I did a particular service. I raised an invoice. Say for a moment, I'm an engineer, I'm an architect. I have given a bill to my client after the work completion. Client says, look, you gave this particular picture. You promised that you're going to give this outcome. But this is what you have given. So there is a gap. There is a deficiency. I'm not willing to pay you for this particular value of service. That could be the reason where I issue a credit note under GST. So these are the 3 reasons where I issue a credit note. Please mark this particular three reasons in your working notes. Now, credit notes, I can issue a credit note for, when I issue, okay, I'll give you a background with respect to this 15 subsection 1 before we travel further. Let me just introduce one slide. So here, we have read section 15, which deals with your valuation. Section 15, which deals with your valuation. In valuation, I need you to read something called 15 subsection 3, which deals with your discount, where a credit note can be issued, Now, this aspect, I'll give little more clarity under section 34. Assuming that there is a supply at on or before making the supply. There is a reference to discount on satisfying certain terms and conditions. Then a credit note with GST can be issued, subject to ITC reversal by the recipient. This is what we have studied in section 15. Examination. 2 marks is minimum 2 marks is a weightage from valuation related chapter. Could be MCQ point of view. And 4 marks to 6 marks is a weightage from problem point of view. Valuation 4 to 6 marks. They may ask you in relation to 15 subsection 1, where related party and money is the sole consideration. Or 15 subsection 2, where there are 4 sub-elements which needs to be added back in value of supply, right? 15 subsection 3 deals with a value which can be reduced from value of supply. So here, there is a supply, assuming that supply is going to take place in April 23. I'll give an example of, say, let's take example of Asian Paints. Asian Paints, they appoint dealers across India. And assuming for a moment, for financial year 22, financial year 23, 24, there is a scheme which is announced. What does the scheme say? Scheme says that every month, like month 1, month 2, etc., every month you should purchase minimum of 1,000 liters. If you buy minimum 1,000 liters for 6 months, they will say you will get 10% discount. This could be one scheme where they say that I have to buy minimum of 1,000 liters every month up to a period of 6 months. If you do that, you will get 10% discount. Probably one sort of scheme. Or there could be some other scheme saying that if you buy goods worth, say, 10 lakhs, they say if you buy goods worth rupees 10 lakhs, you will get a discount of, say, 5%. This is one sort of scheme. Second, this is another scheme. Third, there could be something called volume discount, where they'll say, if you buy, say, 5,000 liters every month, 5,000 liters every month up to 6 months, you will get 1,000 liters as free supply. Now, this is how various schemes are brought into my business. Now, students, pay a little more attention. When I'm giving these examples, this is how my business works. Means to increase my sale, I cannot always increase my selling price. I cannot reduce my selling price. I have to give an incentive. I have to give a carrot to my customer, my dealer, my middle people who can run around and get the business. Now, this is how various schemes are given. Now, here, when we examine section 15, they say on or before the supply takes place, there is a reference. There is a reference to what? Discount on some certain terms and conditions. So before the supply takes place, the seller or supplier is making a promise. Supplier is making a promise. So this particular promise is permitted for the purpose of reduction in my value of supply. Reduction in value of supply. So how do we claim this particular reduction? I'll just take you through a particular scenario. Say month 1, month 2, month 3. We will just take a simple scenario. Minimum purchase discount. Minimum purchase if you do for rupees 1 lakh. Minimum purchase if you do for rupees 1 lakh. 1 lakh. Then discount, say, is given for 5%, 5%, 5%. This is how they have given. Actual purchase. In month 1, I have made for 2 lakh. Month 2, I have made for another 2 lakh. Month 3, I made for 3 lakh. I'll be eligible for discount. Month 1, assuming 10,000. Month 2, 10,000. Month 3, 15,000. This is my discount. Month 4, assuming this scheme is only for 3 months. This scheme is only for 3 months. Month 4, there is no scheme or else it's not available. My actual purchase for month 4, assuming I made it for 2 lakh. So here, the GST law says that now I can give the total discount of 20 plus 15, 35,000 as a reduction in my value of supply. So here, for month 4, scenario 1, scenario 2. Scenario 1, there is a purchase for rupees 2 lakhs by the customer. Scenario 2, there is no purchases by the customer. Scenario 2, there is no purchase from the customer. In scenario 1, what I will do? 2 lakhs minus 35,000. The balance figure of 1,65,000 on this GST would be charged. Assuming in scenario 2, there is no purchases made by the customer, but my customer in month 4 is entitled for a discount of rupees 35,000. Discount of rupees 35,000. So what I will do? I give a credit note for rupees 35,000 with GST. With GST. Now, when I do this credit note with GST, please keep in mind, the law says that the seller and buyer. Seller, in this case, we have assumed that it is Asian Paints. Buyer, let me assume that it is Mr. X. When seller is giving a credit note with GST, then buyer is supposed to reverse input tax credit. Reverse input tax credit. Let me make an assumption. The rate of tax is going to be 18%. My GST rate my GST rate is going to be 18%. On 35,000, 18% happens to be rupees 6,300. So here, the provisions say that, look, because at month one, there is a scheme which is announced. As per the scheme, this particular customer, Mr. X, is entitled for reduction in price. Now, if you carefully examine scenario one, from 2 lakhs, I reduced 35,000. Now, is this 35,000 is no reduction from 2 lakhs? Answer would be, it is a reduction for month 1, month 2, month 3. Whatever month 1, month 2, month 3 purchases are there, this entitled the customer to pay less. Customer is supposed to pay only rupees 1,90,000. But what happened? Initially, the seller has collected 2 lakhs. Later, by virtue of a discount, there was a credit note given for rupees 35,000. This, you will get a clarity when you look at scenario 2. In scenario 2, there is no billing for that month. What am I doing as seller? I'm issuing a credit note with GST. 35,000 happens to be a discount. This particular discount is passed on to my customer. Now, what am I doing? I'm reducing the value of supply. I'm reducing 10,000 for month 1. I'm reducing 10,000 for month 2. I'm reducing 15,000 for month 3. Now, this, when you have GST audit, when you have to explain to your customer, this you have to very clearly specify that the law gives a mechanism to reduce the value of supply. Value of supply of already the supply which took place on 2 lakhs, assuming for month 1, 18%. The customer would have paid 36,000. Month 2, again, he would have paid 36,000. Month 3, say 54,000. 18 3 is 54. 54,000. Now, what is happening here? Government is getting 36,000 for month 1, 36,000 for month 2, 54,000 for month 3. But as per the contract, the government is supposed to get only on 1,90,000 GST. Because this customer, Mr. X, satisfied all the terms and conditions, government says that issuance of a credit note to reduce value of supply, it is permissible as per 15 subsection 3. This is what we need to understand. My valuation provision read with section 34, which talks about credit. I'll see if there are any doubts before we go further. Namrata is asking, sir, can you correlate deficiency in services with our profession? Very rare we come across, Namrata. I give example this way. Say, we have received advance. I'll give example this way. Now, assuming we as a chartered accountant, when we give services, probably there are out of years together experience, out of years together knowledge of the client pattern. There are clients who take the service who doesn't make the payment of professional fee. So out of your experience, you will say, so when I have to handle your work, I give a very live example, which I came across with one of my professional friend. So when there is a GST audit needs to be done, every day we go to the department, we explain to the officer, we come back. Now, assuming you have said to the client saying that, sir, there is an audit for 17, 18, 50,000 rupees is my professional fee, which I'm going to charge. Now, you have taken the work, you have gone to the department, gave all the explanations and workings, you have come back. 3 times you have visited, 4th time the officer saying, Praveen, these are the audit observations, this is the tax which needs to be paid. Now, I'll go back to the client and say, look, based on your records, based on your workings, I produced to the department officer. He says there is a demand of 5 lakh. Now, client says, Praveen, the reason I've engaged you, my accountant could do the same job. I want you to reduce that 5 lakh by your professional experience. I would say, look, the GST provisions are like this. Classic example, your GST at 2A versus 3B. Financial year 17-18, we don't had this input tax credit matching principle with GST at 2A. All of us took the input tax credit. Now the department officer is verifying your 3B vis-a-vis GST at 2A, and they're asking for the demand if there is a shortfall. Now I explained, sir, 2A was not there in picture. 2A was notified in 2018. Section 16 doesn't refer to 2A. All English I've explained. Officer is not happy. When I go back to the client says, sir, I didn't expect this from you. I'm not willing to pay 50,000. Now, when I've done all the work, I have to get my fee. So when I raise a bill for 50,000, client says, sir, sorry, I'll pay you 25,000. Now, probably that could be a scenario where, though I've raised bill for 50K, because client is admitting only for 50% of the work done, I have to issue a credit note for the balance amount. This could be one scenario where there is a deficiency, not matching to the expectation. Not matching, why? When client gave the work, he had some level of expectation. When I completed the work, there was another level of performance. So when there's a gap between expectation and performance, there comes your deficiency. Now, why will you issue a credit note? Again, to continue to your question, Namrata, in month of April 23, I gave a bill to the client. When audit officer have passed an order in May 23, my client says, sir, I don't want to pay you 50,000. I'm willing to pay you only 25K. Now, month of May 23, client made only 25K plus GST. Now, because I billed for 50K, to reduce that value, I'll issue something called deficiency for 25K plus GST. This is where I maintain a documentary evidence saying that there was a deficiency of my service. Geeta is asking this question. Instead of 2 lakhs, if purchase is less than 1 lakh, no discount. Yes, Namrata. Like in our example, assuming month 1, instead of 2 lakh, the dealer has purchased only for 50,000, 50. Then in month 1, there will not be any discount entitlement. Only when you have met the terms and conditions, I will be giving you a discount. That discount is considered to be a reduction in my value of supply. 15 subsection 3. Rahim says, sir, in scenario 1, no need to add GST. Rahim, see, what am I doing? In scenario 1, I have to bill to my customer 2 lakh on that 18% GST. Because I have to give a discount of this 5%, which comes to 35,000. What I will do? I'll straightaway reduce that 35,000 and the net value 1,65,000, whatever is there, on that I'm going to charge 18% GST. Hope this is clear, Rahim. Now, GST law says that, look, you have issued credit note. Very good. But please keep in mind, the month in which you have issued a credit note, the same month you have to disclose that in your return. Disclosure of credit note in the return for the month during which such credit note has been issued. Now, technically, it so happens, human error. Sir, I have raised, I'll just go back to my previous slide. Okay. Let me just insert one slide here. These are all practical issues we come across, where we have raised a document, but we forgot. Say month one, there is a billing for, there is a invoicing, there is a credit. Month 1, invoice is for 5 lakh. GST, say at the rate of 18%. Credit note is issued for 30,000. GST at the rate of 18%. Now, ideally, I ought to pay tax on 4,70,000 and on that 18% GST. Probably this 30,000 accountant has missed. Accountant has he has accounted, but he felt there is some confirmation or approval he has not uploaded. What will happen? I would pay GST on this. Month 2, when I reconcile my books, YTD data. When I try to have YTD data, I would realize that there was a shortfall of 30,000. What I will do? I report this 30,000 in month 2. Practically, this is how we do. GST portal also is not doing any validation. As per law, as of today, they say disclosure of credit note in the return for the month during which such credit note has been issued. This is what the law talks about. Now, by talking about this example, I'll give you a practical scenario where we come across these mistakes. Say I'm a trader. Where if you look at the tax rate, I have goods taxable at 5%, 12%, 18%. Example for this particular line of business, stationery business. Say there is a stationery shop who sell notebooks, pencil, housekeeping equipments, and also electronic gadgets. Let's take example of a company, manufacturing company. They buy scribbling pads, pen from a stationery shop, which is taxable at 5%. They buy this teacups or coffee powder, milk powder, sugar, which are taxable at say 12%. They buy this electronic items like say gadgets or housekeeping items like this cleaning liquid and all, detergent, soap, which are taxable at say 18%. That could be a scenario where in month 1, I have a sale of 5 lakh, taxable at 18%. I have a sales return of 30,000, which is taxable at the rate of 12%. Now, accountant gets confused. Can he do offset like this? Answer is, don't worry. The moment you raise a credit note, please report. Please report. This is one scenario. Second scenario, where we have this credit note issues. Like in another case, assuming I have B2C supply. B2C supply, like let's take example of Myntra or your online supplies. Let's take example of Myntra itself. In month 1, there was a B2C sales. Say month 1, there's a sales to state 1, state 2, state 3 for rupees 10,000, for rupees 8,000, for rupees 6,000. This is my sale. And sales return, probably I have a return for 12,000. I have written for 6,000. I have written for 2,000. Now, sales of 10,000, returns of 12,000. So how is it possible? Probably my sales of previous month got returned in current month. Now, because my sale return is higher than the sales, accountant thinks only to the extent of 10,000, let me report. Now, this is what happens in case of my GSTR 3B. In case of GSTR 1, there is no restriction. In GSTR 1, I can report my credit note the month in which I have raised this particular document. Now, these are the practical challenges which we have when we file on GST portal. So what happens in case of GSTR 3B, where sale value is less than sale return? Sale value is less than sale return. Like example, in a particular month, my sales is rupees 1 lakh. My sales return is rupees 1,20,000. Now, unfortunately, my GSTR 3B does not accept 20,000 negative figure. So what I have to do? I have to carry forward to next month. So what if in the subsequent months I don't have any turnover? Then whatever tax you have paid on this amount, claim a refund from GST department. Because you paid tax more than your supply, whatever tax you have paid, you can claim a refund. The GST law permits me to claim a refund. This is what we need to understand with respect to credit note. Next. Having talked about this credit note, one another aspect we need to remember is issuance of a credit note within due date, that is 30th day of November, a month following the financial year during which such supply is made, or annual return, whichever is earlier. Now, every particular financial year, there is a time limit specified, saying that for a particular financial year, let me give an example of financial year 22-23. 22-23. For 22-23, my time limit is up to 30th November 2023. I can issue a credit note. I cannot issue a credit note beyond 30th November 2023. So that means to say, any transactions for a particular financial year, earlier the time frame is 6 months up to 30th September. Recently, in 2022, there was an amendment which took place. The date was enhanced to 30th November of subsequent financial year. So this is my time limit for issuance of a credit note. No reduction if is permissible if instance of tax has been passed on. Now, when I say instance of tax has been passed on, I'll give one example with respect to this instance of tax. A good old central excise MRF case. Incidence of tax. Most of you would have read this technical term, unjust enrichment, incidence of tax, or the other term for this is your burden of tax. Burden of tax. I don't know how many of you have issued a CA certificate giving this unjust enrichment to a particular customer. In customs law, we used to rely upon this particular aspect. Customs law, when I touch upon customs aspect, there's one topic called refund under customs law. I give a little more clarity under customs law. So this instance of tax, or I would call unjust enrichment or burden of tax. The taxing authority, the tax laws say that, look, there was a supply. There was a supply. On supply, there is a collection of tax. Collection of tax. Subsequently, when a credit note is issued, they say that subsequently when a credit note is issued, this tax, what was paid by customer, will not be refunded or benefit given to seller. This is what they say. Let's take a one live example where we come across this instance of tax sort of thing. Let us assume that 47th GST Council meeting. 47th GST Council, where there was a change in rate of tax. Say a particular commodity, all along it was taxed at the rate of 12%. It was enhanced to 18%. Now, there was a sale for rupees 1 lakh on which the tax is collected 18%. That is 18,000. Tax is collected for 18,000. 1 lakh 18,000. Now, this is what actually happened. Now, the chartered accountant has explained provisions of section 14, which deals with your time of supply provisions, and also which gives you a clarity how to identify the applicable rate of tax. Section 14 gives us a clarity. Now, there are three elements, like what is that? Issuance of a tax invoice, receipt of money, then supply, actual supply. We examine these three elements, whichever happen, that will be the rate of tax. The chartered accountant, on the basis of the internal audit, he says 18% is incorrect, 12% should be the actual rate of tax. Now here, on 1 lakh, 12% happens to be 12,000. On 1 lakh, 12% happens to be 12,000. The gap between these two is rupees 6,000. Now, assuming for a moment, the seller happens to issue a credit note for rupees 6,000. This is your tax amount. The government comes and says, Baba, have you passed on the incidence of tax? Now let's take example of this example. There is a cartridge for printer. Say, I as an individual customer, I went to the market, I purchased a cartridge on which I paid to the shop owner 1 lakh plus 18,000. And this was reported as B2C transaction. Why B2C transaction? For a moment, let's assume that Rahim went to the market, he purchased a cartridge for his particular printing press. Rahim is not registered under GST. So Rahim paid 1,18,000, he got the cartridge, he came back to his office. Now this seller, who happens to be a cartridge dealer, when he issues a credit note, you and I as a chartered accountant, we will say, look, you have collected 18,000 from the customer, you paid that 18,000 to the government. How will you issue 6,000 credit note when the incidence of tax has been already passed on? Did the customer came to you and say, Baba, you collected 18,000 instead of 12,000? In case if you can establish that this incidence of tax has been passed on. Now, the question comes here, how do you prove that you have not passed on this incidence of tax? Now, to answer that question, we refer to something called tax refund. For a moment, say this shop owner gives a refund of rupees 6,000 to Mr. Rahim. Now, what entry I will pass? Debit GST refund due to cash account 6,000. This is how I park an accounting entry. And this GST refund, I will treat as a current asset in my balance sheet. I'll treat this as a current asset in my balance sheet. Now, you and I, as a chartered accountant, when I issue this certificate, what we will say, look, the incidence of tax has not been passed on. How do you prove this? The burden of this tax, I have been carrying this burden. How do you prove? So please look into my balance sheet. So in my balance sheet, there is a current asset. That I'm saying that this is a money which is due from the government. This is the importance of this term called incidence of tax not passed on. Incidence of tax not passed on. I'll see if any doubts before we go further. Namrata is asking this question, sir, how is it possible to have sales return more than sales? Not returns of this month, Namrata, probably previous month return in this month. That could be the reason. Next, the converse or the composition of the transition of credit note is debit note. I have to bill for 1 lakh. But I have billed only 10,000. Zero doesn't have value. Accountant felt so. So instead of billing 1 lakh plus 18% GST, the accountant billed 10,000 plus 18% GST. So he forgot to add 10. Clerical error. So what I'll do to increase the taxable value or to increase the tax, I issue debit note. When my taxable value or tax is found to be less than the value after charge. That could be the reason where I issue a debit note. Registered person can issue a debit note to the recipient for one or more debit notes in a financial year, containing the details as may be prescribed. Unfortunately, there's no time limit for debit note. Why? Government is getting revenue. In credit note, government is losing their revenue. That's why they have given time till 30th November. In case of debit note, I collect extra tax. I collect extra amount. Because government is getting money, they are not given any time limit for credit. The other technical name for debit note is called as supplementary invoice. The other name for debit note is called as supplementary invoice. Before we start with the e-way bill, let me see any doubts so far. Namrata is asking this point. So incidence of tax point is not clear. I'll put it this way, very simple, Namrata. Incidence of tax, that means to say the burden of tax. The burden of tax. I'll give one more example from customs law. This is more to do with your customs law. Look at this way, Namrata. When I say incidence of tax, there is some issue with my pointer. Let me just rectify this. I'll just stop sharing. Let me share it back. Okay. Incidence of tax. Now, incidence of tax is nothing but the burden of tax. Now, I'll give two examples for you to understand. One is on sale, one is on purchase. Now, purchase, when I purchase, say, raw material for rupees 1 lakh, on that I pay GST at the rate of 12%. I would like to claim a refund of this particular 12%. On 1 lakh, 12% happens to be rupees 12,000. So here, government says, why should I give a refund of this 12,000? What is the guarantee that this 12,000 you have not passed on this burden to customer? So here, what I will do when I prepare my costing, in my profit and loss account, I'll say to purchases 1 lakh, profit margin at the rate of 20%, sale 1 lakh 20,000. And this 12,000 I'll report in my balance sheet as current asset, and this is shown as money recoverable from government, money recoverable in cash or kind from government. So here, based on my P&L account, if you see, my cost of operation is only 1 lakh. It is not actually 1 lakh 12,000. Though I paid cash of rupees 1,12,000 to my seller, I booked my cost as 1 lakh. On this gross profit 20%, and I made a sale. Because this is how you are represented and balance 12,000, you shown your balance sheet as current asset. They say incidence, that is, the burden is not passed on to your customer. This is one example in case of your purchases. In case of sales, they say that, look, I gave example of this cartridge sale. I gave this example of a cartridge sale. Now, in this case, assuming it is a B2C supply, I sold a cartridge for 1 lakh, on which I collected 18,000 as GST. 18,000 as GST. A point in time, I got to know that my GST rate is only 12% and not 18%. So I have issued a credit note for rupees 6,000. For rupees 6,000. So when I have to issue a credit note for 6,000, the law says, look, the burden of this particular tax is on seller or buyer. In case of a B2C sale, unless the customer comes back and says, so you collected 6,000, please give it, you have collected 18,000, but actually the rate of tax is 12,000. When I give a refund to the customer, I show this as a amount in my balance sheet as current asset. Only in this case, only in this scenario, we as a chartered accountant give a certificate to the assessee saying that we examine the books of account, we examine the purchase or we examine the sale, the tax paid on the purchase or the tax collected on sale has not been passed on, has not been booked as a cost in my P&L account, has been shown in my balance sheet. For this, a CA certificate is issued. This is where we talk about incidence of tax. Hope this is clear, Namrata. Rahim is asking this question. So debit note is a reciprocate of credit note. Answer is yes. Debit note is a reciprocate of credit note. If supplier issues credit note, then debit note is issued by recipient. Now, this is where I correct your understanding. Credit note or debit note under GST is issued by seller. I repeat, debit note or credit note under GST debit note or credit note under GST issued by seller. For the purpose of credit note, if seller is giving credit note, then accounting debit note is issued by buyer to confirm ITC reversal. This is what section 15 subsection 3 is expecting. I'll give example this way. Say there is a seller called now let's stand to that particular example of say paint business. I'll put it this way. Seller is Namrata and buyer is say Rahim. Namrata says, I'll give you a credit note for 10,000 and GST thereupon say 1,800. 11,800. 11,800. Now what does Namrata will say? Debit sales discount, debit GST payable, credit Rahim. She has accounted this credit note in her books, 11,800. So Namrata has recorded in her books that she is not going to receive 11,800 from Rahim. Now, this should be reciprocated by Rahim. So, what does Rahim will do in his books of accounts? Rahim will say, debit Namrata 11,800, credit GST ITC 1,800, credit purchase 10,000. So Rahim says, I'm going to reduce my purchase value. Similarly, Namrata is going to reduce the sale value. And Rahim says he is reversing his input tax credit. Now, this is a requirement under section 34, right, with section 15, subsection 3. 15, subsection 3. This is what law is expecting us to maintain. Law is expecting us to maintain. Hope this is clear, students. Now, I'll jump to the next aspect called e-way bill under GST law. E-way bill under GST law. Before explaining this e-way bill concept, I'll give you a background. One of the recent Supreme Court judgment, which is connected with VAT law. There's one ECOM GIL case. ECOM. This is a Karnataka VAT related case law. There's a buyer. ECOM is a buyer. ECOM is into, let's take example, is into the trading activity. They're into trading activity of steel. ECOM had purchases from, say, vendor 1, vendor 2, vendor 3, vendor 4, vendor 5. ECOM had purchased the goods from these particular vendors. So this vendor has collected basic amount plus VAT thereupon. And this particular VAT, whatever was paid, this was claimed as an input tax credit. And this ECOM, they exported steel to their customer in, say, Singapore. There is a for exports, there is no rate of tax. So this input tax credit is accumulated in books. This particular accumulation, because there was an export, this particular ECOM is entitled for refund of this particular input tax credit which was accumulated. Now, the assessing officer, what he has done, he has verified based on the TIN number, tax identification number, the VAT filing status of vendor 1, vendor 2, vendor 3, vendor 4, vendor 5. Vendor 1 defaulted, vendor 2 defaulted, vendor 3 defaulted, vendor 4 defaulted, vendor 5 alone paid tax. Now, this assessing officer got a suspicion. What this particular assessing officer said, look, I presume, I don't believe that you are entitled for this refund. He has rejected this refund for asking the assessor to prove bona fideness of this particular transaction. This particular bona fide element is examined in GST law in section 155 with regards to input tax credit. I repeat, under GST law, section 155 talks about establishing the bona fideness of a input tax credit related transaction. So assessing officer asked, look, you have paid this particular VAT. I agree with you. Do you have any documentary proof? You have any documentary proof to prove that this particular tax was paid by your vendors to the government? Do you have any other documentary proof that actually the material were received and supplied? Where they've asked something called e-sugam. E-sugam was a document like similar to e-way bill, which was there under VAT law. They also asked, can you give me lorry receipt? Can you give me the toll charges paid document? Now, this is how the questions came in for examination. The VAT officer has questioned this. Naturally, what will happen? The dealer will file a writ petition in High Court. My lord, the assessing officer is becoming more creative. Is asking for document which was not prescribed under the law. From where I'll give this particular documents. Karnataka High Court said yes, the assessee is correct. Assessing officer cannot question this particular documents which is not prescribed. Now this matter traveled to Supreme Court, and 2023 Honorable Supreme Court have given a very clear mandate. Look, when the benefit of input tax has to be established, the buying dealer has to establish that he has purchased the goods, there was a movement of goods, there was a document to establish that the goods were delivered. For this particular purpose, they started recording something called e-way bill related transactions under GST law. So e-way bill has come into picture, e-way bill has come into picture to track movement of goods, This was a background where e-way bill was brought in to curb the fictitious or fake transactions. So they say that unless there is an e-way bill, this genuineness of transaction cannot be established. To start with our basics. Basics of e-way bill. What is an e-way bill? E-way bill is a document. E-way bill is a document. This particular document enables movement of goods. It is an enabler. That means to say, it is a prerequisite under GST law for movement of goods. It's a prerequisite document under GST law for movement of goods. If e-way bill is not there, the GST authorities may question. Genuineness of this particular transaction. Transporter should carry this document. Who has to carry this document? Transporter has to carry this document. Should be carried along with invoice, delivery challan, or bill of supply. So here, law says that, look, if there is a supply, for supply, you will issue a tax invoice. If there is other than supply, you will issue something called delivery challan. Yesterday, we have studied the previous session, we have studied Rule 55, where a delivery challan is issued. What could be the reasons for issuing a delivery challan? Stock transfer, not stock transfer, such for job work, movement of goods other than supply, import of goods into India, or maybe for calibration purpose. I cause the movement of goods other than supply, then a delivery challan is required. In case of a goods exempted under GST, bill of supply is a mandatory document. It is mandatory when the value of consignment is above 50,000, inclusive of all taxes. Certain exceptions, wherever covered, I'll explain in detail. Now, law says more than 50,000, the value of consignment. If the value of consignment is more than 50,000, e-way bill is required. In certain states, like example, Tamil Nadu. In Tamil Nadu, this 50,000 was mentioned, amended as 1 lakh. Any goods within the Tamil Nadu up to 1 lakh, e-way bill requirement is not there. Other than Tamil Nadu, rest of India, any movement of consignment exceeding 50,000, e-way bill is compulsory. And please keep in mind, when I talk about this consignment value, this includes all taxes, CGST, SGST, IGST, and cess. This should be generated before commencement of the movement, before commencement of the goods, before commencement of the goods. When should e-way bill be generated? When should e-way bill be generated? Before movement of goods in relation to supply, that is intrastate, interstate, exports, imports. Now, points to note here. When I say before movement of goods, if it is on account of supply. Supply for intrastate, interstate. Supply for exports, supply for imports. For the purpose of imports, the person who is importing shall be deemed to be a supplier for compliance of GST purpose. For reason other than supply. So what could be the reason other than supply? Sales return. When I make a sale, I call that as a supply. Goods coming back, I call that as a sale return. Purchase return. I am a buyer. I have purchased goods. I am not willing to retain the goods. I am returning back the goods. That's called as a purchase return. Job work, exhibition, line sales. Now, line sales is one example where I don't know the quantum of sales. I don't know the quantum of sales, what happens. So what I'll do, I'll take 1 barrel of, oil. I go to shop to shop, how many liters they want, I'll remove and I'll sell that particular oil. So when I talk about this pulses, oil, etc., as a line sale, I prepare a delivery challan. So when I load this particular truck, I'll say, there are 100 bags of groundnut. There is, say, 50 bags of this cashew nut. There is 1,000 liters of oil. So I prepare a delivery challan. Every shop, when I give the quantum, I give an invoice then and there as per the requirement. This is my movement other than supply. Last, inward supply from an unregistered person. GST law says that in case if there is a movement of goods, that is inward supply from an unregistered person. URP. Registered person causing the movement of goods inward from an unregistered person. Then this particular registrant shall be preparing e-way bill. Who should generate e-way bill? Seller registered under GST law, recipient also registered under GST law. If seller is registered, recipient is also registered, then either seller or buyer, whoever is causing the movement of goods, they shall prepare e-way bill. I repeat, if X work transaction at the doorstep of A, goods are transferred to B, then B will prepare an e-way bill. If it is a FOR transaction, at the doorstep of B, the ownership is getting transferred. Then instead of B, A will prepare e-way bill. So in case of both parties registered under GST law, A or B, whoever is causing the movement, he shall prepare e-way bill. Case 2. Supplier is unregistered. B, recipient is a registered party. In case the goods are purchased from a unregistered party, B, who happens to be this particular register person, he has to prepare e-way bill. Case 3. I have a seller who is unregistered, buyer who is unregistered. In that scenario, transporter who transports the goods, he can prepare the e-way bill. How does he prepare e-way bill? He will use the PAN number of seller or PAN number of buyer. He makes a reference to the invoice given by the seller. Or A or B, whoever is causing the movement of goods, by entering their PAN, they can prepare e-way bill. I'll give an example for this case 3. In case of case 3, please remember this handmade handicraft goods. Handicraft goods. Assuming that A is from Karnataka, B is in Rajasthan. Karnataka, seller is unregistered. Rajasthan, this party is B2C party. So when the goods are moved from Karnataka to Rajasthan, transporter can prepare an e-way bill, or either of A and B can prepare this particular e-way bill. Either of A and B can prepare e-way bill. How they will prepare? Using the PAN number, they will prepare e-way bill. What if goods are sent for job work? If goods are sent for job work, irrespective of the value, in case of interstate movement, e-way bill has to be prepared. This is an exception to your value. You remember, I say consignment value exceeding 50K, e-way bill is required. Now, exception to this rule is where the goods are meant for job work, and this is an interstate movement. Assuming for a moment, the principal is in the state of Tamil Nadu. Job worker is in the state of Maharashtra. Seller, when the goods are being sent by principal in Tamil Nadu to the job worker in Maharashtra, and the value of consignment, assuming the value of consignment is 10,000. In this case, exception to this particular rule of 50,000, the seller, that is the principal, has to prepare e-way bill in case if job work is unregistered party. This is an exception. Examination 1 mark MCQ can be expected from this particular e-way bill related transaction. Now, all these are the MCQ based questions. Institute website, Board of Studies, ICAI website. If you visit, students, there is a separate topic called MCQs, wherein you have this compendium of chapter-wise MCQs which are tested. Now, these are all just to test your fundamentals, how you examine these particular provisions. Now, in case of an e-commerce business, generally we have you would have purchased on Flipkart, Amazon, Myntra, etc. Recipient happens to be an unregistered party. There, the e-commerce operator or the courier agency, either of these two parties can generate an e-way bill on behalf of consignor. I'll give an example for this e-way bill in case of e-commerce. Say, Amazon is a e-commerce operator. Say, ABC Limited, they are the seller, and Mr. X happens to be a buyer. ABC Limited, they sell, say, a mobile phone. The mobile phone is worth, say, 50,000 plus GST 18%. Say, put together 59,000. Because the value is exceeding 50K, on behalf of ABC Limited, this e-commerce operator will prepare e-way bill for causing the movements from ABC Limited to Mr. X premises. This is the case where e-commerce operator or a courier agency can prepare e-way bill on behalf of consignor. Now, please keep in mind, the software is going to examine how to match your compliances under tax laws. So you have to know this GST provisions. You should know your income tax provisions to drive the business. This particular point, I'll give my inputs this way. All of you are going to get qualified very soon as a chartered accountants. Once you drive this particular business, you should know all the nitty-gritties of the tax compliances with regards to how does the tax work, what documents are expected under the GST law, what compliances are there under income tax, what is the do's and don'ts in case of doing a business. Like example, can I collect cash more than 1 lakh? Can I sell more than 2 lakhs for cash? What happens if PAN number is not there? If it is an interstate supply, where the customer is a B2C transaction. Now, all these are the compliances which comes as a surprise when the assessment takes place 3 to 5 years down the line. Especially with respect to GST, this being an indirect tax, every transaction 18% is a 12 to 18% is a cost. So you have to watch carefully how do you handle these compliances. Moving forward, handcraft goods, I gave example where irrespective of the value of the goods, in case of handcraft goods, the invoice, the e-way bill has to be prepared by the seller using the PAN number, which is available to him. Now, we have studied earlier under section 23. Under section 23, under section 22. Section 22 talks about threshold limit. 23 deals with exclusive exempted goods. Now here, by virtue of section 22 read with 23, seller who deals with handcraft goods is not registered under GST. In the case of movement of goods for handcrafts, whatever be the value, the e-way bill has to be prepared in case of movement of handcraft goods, where PAN can be used for preparation of e-way bill. PAN can be used for preparation of e-way bill. 24 subsection 1 deals with the interstate supply. 24 subsection 2 deals with your casual taxable person is scenario. Well, the transporter can prepare e-way bill when both consignor and consignee are not registered. When it is interstate supply and mode of transport is by road and the consignee has not generated e-way bill, transporter can prepare e-way bill. Now, how to generate e-way bill? This is just a procedural thing. We will log on to this website called ewaybillgst.gov.in. There is two parts in this particular form called GST e-way bill 01, part A, part B. Part A is this collection of your data. Like you are, say, when you are paying your income tax, it will ask, what is your PAN? What is your financial year? Under what head you want to deposit this tax? Is it self-assessment tax, advance tax, etc.? Similarly, in case of supply, who is the seller, from which place the goods are dispatched, what is the GST number of recipient, where is the place of delivery, invoice A5 document number, is it invoice, is it delivery challan, is it bill of supply, date of the document, value of goods, HSN code, and reason for transportation. Along with this, part B, which talks about transporter information. Now, please keep in mind, unless this particular part B is filled, I repeat, unless this particular part B is updated, it is deemed that e-way bill is not prepared. To carry an e-way bill, both part A and part B should have been filled. I'll fill part A. I don't know the details of transporter. I just leave as it is. Then the law says that unless the details of transport is not mentioned in part B, your e-way bill is not valid for movement of goods. For movement of goods, both part A and part B have to be compulsorily filled. In part B, I'll give the vehicle number for road. I'll give the transporter document number. Transport document number is your unique number generated on the GST portal. In case of defense vehicle number, transport registration number. In case of goods by road, Nepal and Bhutan, I'll give the registration number of Nepal or Bhutan vehicle number. These are the basic details I have to furnish in relation to movement of goods by road, where part A and part B have to be prepared. Now, I say that unless you prepare e-way bill, that is part B, it is not valid for movement of goods. Now, there is an exception. There is an exception to this particular rule. Assuming I give a scenario like this. Say there is a industrial hub called, say, in Pune. Let's take example of Pune. In Pune, there is a industrial hub called Chinchinwad. And this is my, okay, I'll give little more clear example. Assuming this is a industrial area where various business operate their factories. Now here, assuming this is a hub, I call this marketplace as a hub of transporter. What happens here? All the goods from individual factory will be pooled here in this particular hub before transportation. Once the material are pooled here, from here, I actually move to the destination. Law says where goods are transported for a distance up to 50 kilometers within state or union territory from the place of business of the consignor to the place of business of the transporter for further transportation may not furnish details of conveyance. So here they are saying that this part B need not be updated. Why? Like if you know that this transportation vehicles, I have say Tata 407, I have Tata Ace. Tata Ace, Tata 407, they can get into 20 feet road. When I have this truck, the truck can go only into 30 feet road. I cannot take a truck which is having 20 feet container to travel to 20 feet road. So for ease of pooling of my material goods for transportation, I as a transporter, now I'll give example of VRL. So VRL, what they do, they use smaller vehicles for collection of the goods from the factory. So in that case, the factory, whoever is the consignor, they'll just fill part A and they give it to VRL. VRL person gets those material into the main hub. They segregate the state-wise. They put into the bigger truck called, say, lorry or 20 feet or 40 feet container. That bigger truck moves on to the destination. So here, up to 50 kilometers within the state, no need to update part B. Examination, 1 mark MCQ as a test your knowledge. Now, these are the questions which are framed for your understanding purpose. Moving further. Second exception. The way I see pooling at the source point, the same way destination. VRL, the truck came to the destination. At destination, what will I do? I will, I'll explain this way. Say, the goods have come in a big truck of 40 feet container. 40 feet container. Now, this 40 feet container cannot go to small streets of 10 feet or 20 feet. There, I put this big consignment into smaller trucks and I move it for dispatch. This law says goods are transported for a distance up to 50 kilometers within the state or union territory from the place of business of transporter finally to the business of the consignee. Transporter to consignee. Details of conveyance may not be updated in e-waybill. They say whatever part B was updated earlier, let that continue or that may remain for rest of delivery. Examination, what could be tested? They will say this way. I'll give example of Karnataka and Tamil Nadu. Say this is my Karnataka and this is my Tamil Nadu. Between Karnataka and Tamil Nadu on the border, I have a place. I call this place as say Hosur. Hosur. Hosur is a place in Tamil Nadu. Now from Hosur, 1 kilometer is your Karnataka. Now examination they'll ask, the material have reached the VRL hub of Hosur in Tamil Nadu. As per GST provisions, Part B need not be updated for interstate movement for delivery to consignee for delivery. Law says where the goods are transported for a distance up to 50 kilometers within the state. So from Hosur to Karnataka, the moment I enter, though it is 1 kilometer, because it becomes interstate, this provision exception is not applicable. Where you will say it is compulsory for updation of Part B. This is what tested in your examination, where this Part B needs to be updated, where this Part B is not required to be updated. What if multi-mode of transportation is used for delivery? At any given point of time, e-waybill should contain details of vehicle in which the goods are currently present. Now, when I was talking about this multi-mode of delivery, the goods can be transported by road, by rail, by vessel, or by air. So here, my e-waybill, that is your Part B, when we talk about vehicle details, I have to mention any of this mode of communication or mode of transportation in this particular Part B. This is mandatory for us to mention. Transportation solely by road. So in case of delivery only by road, it so happens that I put into a smaller truck, this may go into a bigger truck, or it may go from smaller one truck to another truck. So here what happens? The person who is generating this e-waybill, he will assign this e-waybill to the transporter for updating Part B. Now I use a language here called assign. Let me select. Person who generates e-waybill update the details of vehicle in Part B and assign. The moment the consigner mention the UIN, unique identity, I would say UIN of transporter. Now, example, VRL. VRL, they are registered all states of India. Assuming for a moment they have 28 registrations. So all 28 registrations put together, they have one unique identification transport number. That unique identification number, the moment I mention, this goes and sits in the VRL doc. So what does the VRL needs to do? Whenever there is a movement, this particular VRL, the authorized transporter can further assign the other transporter for updation of Part B. So here we need to understand that whatever is assigned to VRL, VRL has a choice to update one vehicle to another vehicle. Case 2. Mode of transportation involves railways, air, or vessel. So usually the consigner, he will give the goods to the transporter. he'll assign the transporter. Transporter, then he will update the details of rail or air or by road in part B. He'll update, transporter shall update railway receipt, RR, or aircraft details or vessel details. So when I give it to air cargo, I have to mention this AWB number, they generally call as the flight details. Those details will mention in part B of e-label. So any point in time, this is a duty of the transporter to update when there is a multi-mode transportation. Multi-mode transportation. Now, so what happens? Where the transporter, say there is a truck. There is a truck. This particular truck has got 30 consignments and 30 e-webils. Now, as a transporter, I will log on to GST portal. When multiple consignments having separate e-waybill are carried in a single conveyance, a consolidated e-waybill can be generated, which is called e-waybill 02. So what does a truck fellow will do? Truck fellow will log into the GST portal. In the GST portal, he will enter the details. This is my vehicle registration number, and these are the details of consignment I'm carrying. All these consignments put together, e-way bill 02 will be prepared. So why is this required? Now, when there is as per section 68, there is an authority for inspection. Authority for inspection. So when the officer wants to do this inspection of vehicle, he has to verify all 30 e-way bills individually. He has to prepare all these 30 e-way bills individually. Instead of that, if this e-way bill 02 alone is there, using e-way bill 02, the officer can easily verify these particular transactions. This is what we need to understand. Students, we're at 7:32. Let's have a 10 minutes break. 7:42. Let's resume back with our discussion. Let me see any doubts before we start with our discussion. Namrata is asking this question. Sir, what is consignment means? Consignment in common parlance, Namrata, this is the package or this is a packet which you want to deliver. I repeat, in business parlance, the goods which are meant for delivery by way of transportation, by use of mode of transportation, that particular goods which are packed, maybe in general, I call that as a consignment, right? So I'll give an example this way. Say there is a laptop, there is uh, the 2, 3 boxes. Okay. Let's take example of a desktop. I have CPU, I have monitor, and I have keyboard. Now all three are packed in individual boxes. I bill for 50,000 plus 18% GST, 59,000. So when this computer has to be delivered, all these three boxes together, I call as a consignment. Hope this is clear, Namrata. Rahim is asking this question. So when the goods reach the port, in case of import for local transportation, what is the requirement? So here, Rahim, GST laws is very simple. They say movement of goods through a motor vehicle, e-way bill is required. I repeat, movement of goods where the consignment value exceeds 50,000 through a motorized vehicle, e-way bill is required. So here, when the goods reach the customs port, from customs port, it can't travel to my factory as it is. So what I will do, I will put it to a truck and through truck, it travels back to my office. Then I call that as a import transaction where when I prepare e-way bill, it says e-way bill is prepared for what purpose? Is it for outward supply? Is it for inward supply? Reason, when I buy the goods from an unregistered person, I am a registered person, then I have to prepare e-way bill, right? So I'll say inward supply. Then I'll say import and the goods are selected for whatever the bill of entry details are there, I'll mention and I'll say this is the consignment which is meant for transportation. Namrata is asking, sir, please update notes. Definitely, Namrata. I forgot whatever presentation material is there. I'll upload by next session, ma. Thanks for reminding. If supplier is registered and buyer is unregistered, then seller will generate. Yes. And alternatively, Namrata, if buyer is registered and seller is not registered, buyer will generate e-way bill. Sir, even in intrastate for handcraft goods, e-way bill should be issued. Only interstate it is required, right? Interstate, because it is crossing the state, e-way bill is compulsory, irrespective of the value. If it is intrastate, on the basis of your value of goods, you can prepare e-way bill. Namrata is asking this question. Lawyer may think from perspective use of law. Lawyer may think from the perspective of use of law. I didn't get this question, Namrata. Let me get little more clarity. We will discuss on this particular point. Cancellation of e-way bill. Now, I prepared e-way bill. After a point in time, I realized that this e-way bill is not required. So, law says that e-way bill can be cancelled within 24 hours of generation. Within 24 hours of generation of the bill, but cannot be deleted once generated. Deletion is not there. Cancellation is there. Cancellation is there. This is what GST law says. Cancellation can be adopted for the below reasons. What is that? The mentioned goods are not transported. If the goods are not transported, I can cancel e-way bill. The goods are not as per details, not as per details furnished. Example, I have prepared invoice for say 50 uh, carton boxes, but in the e-way bill, I have mentioned that it is 48 bales. Now, carton boxes is a packing material. Bales is a rope which is used for tying. So what I have prepared in the invoice, what I have mentioned in the e-way bill, if it is mismatched, I cancel that. Or due to any other error while furnishing the details. But it cannot be cancelled once it is intercepted and checked by the officer. Once the movement of goods is happening, officer stop this particular consignment. He verified your details. Once the officer has verified, interception happened, then I cannot cancel my e-way bill. Validity. Now, very simple. Law says that e-way bill is having a life based on PIN code. Based on PIN code. Consigner and consignee. Consigner, consignee. Based on the distance between the consigner and consignee PIN code, the number of kilometers is computed. Number of kilometers is computed. Based on this number of kilometers, for vehicle other than over-dimensional cargo, this ODC, over-dimensional cargo. A classic example for you to remember, please recollect your windmill case. Your windmill, it's a 40 feet trailer. Windmill is a minimum of 40 feet trailer. When I say 40 feet trailer, the turbine which rotates, no, that has to go on a big truck. The big truck cannot pass at the same speed like a smaller truck. So other than this ODC, over-dimensional cargo, up to 200 kilometers, they say for every 200 kilometers, 1 day is given. So what if 220 kilometers? 200 kilometers, 1 day, extra whatever is there, for that 20 kilometers, another 1 day. So 2 days I get. 250 kilometers, 2 days. 280 kilometers, 2 days. 320 kilometers, 2 days. 399 kilometers, 2 days. 400 kilometers. Every 200 kilometers, 1 day. 200 plus 200, 2 days. 401 kilometers. 200 kilometers 1 day, 200 kilometers 1 day, extra 1 kilometer, another 1 day. This is how based on PIN code, the system does the calculation of number of kilometers. On the basis of this particular details are updated. So when I fill e-way bill, I select this ODC or normal vehicle. Based on that, they assign what is the time limit for carrying this particular e-way bill. So what if it is a over-dimensional cargo? Then the provisions say, because it's a big truck, for every 20 kilometers, I'll give you 1 day, where the goods are meant for movement through ODC, or it is a multi-modal shipment. If it is a multi-modal shipment, in which at least one leg involves transport by ship. So if it is a multi-modal shipment, then I'll select 20 for every 20 kilometers, 1 day. So when I'm filling e-way bill, I'll select ODC or multi-dimensional cargo. Based on your selection, the distance is calculated, the number of days validity is given. I'll give you one example to understand. Let me just insert one slide. Assuming that 5th April 2023, 5th April 2023, practical scenario, evening 4:30 p.m., evening 4:30 p.m., tax invoice is prepared. Tax invoice is prepared. 5:30 p.m., e-way bill with part A is generated. 6 p.m., Your part B, the transporter details are updated. Transporter details are updated. Now, assuming the distance is for 80 kilometers, then the validity is for 1 day. So that means 5th April I have prepared till midnight of 6th April 2023. This e-way is valid for movement of goods. For movement of goods. Examination based on the distance, computation of number of days. Based on the number of days, validity is examined. Again, this is 1 mark MCQ from your examination point of view. So what happens if, say, 5th April, tax invoice is prepared, part A is updated, part B is updated. Now, only when, please remember, only when part B is updated, e-way bill is valid for movement. E-way bill is valid for movement. This is as per Rule 138. Rule 138. So, 6th April 2023, evening 4 p.m., there was an accident. There is an accident to vehicle. There is a further distance of 20 kilometers to travel for delivery of goods. What needs to be done? In this case, this e-way bill, which is valid till midnight, assuming 6th April it was damaged, till 7th April there was no other alternative vehicle available. Then e-way bill can be extended. That is, the validity can be extended. How? 8 hours before expiry or 8 hours after expiry. Before or after expiry. I have a time limit of 8 hours, either before expiry or after expiry, to amend or to update the e-way bill, saying that, look, the vehicle got damaged. The vehicle, this particular validity is over. Kindly give me a extension for this. This is what the GST provisions talk about e-way bill validity. Now, reasons for delay. The movement of vehicle should be ceased. What if validity expires before delivery? In case of some exceptional nature, such as natural calamity, law and order issue, transshipment delay, accidents of conveyance, transport in charge of the conveyance can update the details, causing the delay in Part B of GST e-way bill. So here, the law says that there are multiple reasons beyond your control. So you can update your e-way bill, get your validity extended. So here, if there is a breakdown in the vehicle, get it repaired, go ahead. If I cannot get it repaired, whatever vehicle number is there, update the new vehicle number, do the transshipment, send the new vehicle. Now, don't send the vehicle without updating your vehicle registration number. This is very, very important. Now, rejection of e-way bill. Now, there is one Bihar High Court judgment in relation to this rejection of e-way bill. This so happened that seller will prepare e-way bill. This gets auto-populated to the buyer on the basis of GST number. On the basis of GST number. Supplier or recipient of the goods can reject any consignment within 72 hours, that is 3 days, of raising the e-way bill or time of delivery, whichever is earlier. Transporter can help of the consignor or consignee raise another e-way bill stating a sale return for rejecting the goods. Now, this was a classic case where the seller was in Bihar and the buyer was in, say, Maharashtra. 13th April 2023. E-way bill along with tax invoice along with e-way bill has been prepared. Material left Bihar on 14th April 2023. The buyer has cancelled this e-way bill. Now, why a buyer has cancelled? Buyer says, look, I asked for delivery on 20th April. 20th April 2023 was my for schedule for delivery. You have come ahead of delivery. So this was the reason my buyer has not cancelled, sorry, I should say rejected. My buyer has rejected this particular consignment. This was a fact not known. This fact was not known to the transporter. On 15th April 2023, the transporter was heading from Bihar to Maharashtra. The journey was still going on. On 15th April, the the GST check post officer has intercepted the vehicle. I use a technical term called interception. Interception under section 68, where the GST officer can stop the vehicle, verify what document you are carrying, what goods you are carrying. So any vehicle which is meant for transportation, the proper officer will stop the vehicle. He'll say, show me the document. First, show me the document. Do you have a tax invoice? Do you have a delivery challan? Do you have a bill of supply? Please tell me what document you are carrying. Along with this document, do you have e-way bill? Now, if you had this, then he'll say, open the truck. Let me do the inspection. In invoice, how many quantity you have said, how much value you have said. In e-way bill, how much quantity you have said, how much value you have said. He will tally these documents. Then he will verify the physical goods. Now, in this case, unfortunately, when the interception happened, this e-way bill on the mobile of the GST officer was shown as rejected. Now, the officer said, look, you're going with the consignment which is not meant for delivery, so I will levy a penalty. Penalty under section 129 has been levied. Penalty. This matter traveled to High Court. High Court saying, look, why did you carry this material when your customer has rejected? Customer said, sir, I don't know. Midnight there was a rejection, but I have an intention to supply. I have a tax invoice, I have a delivery challan, I have a e-way bill. Then the court said, my dear officer, what is that you have to say? So when the e-way bill was cancelled or rejected, this consignment should go back to Bihar. Why is it heading to Maharashtra? Again, the court asked, what reason you have to prove? Now here, intention to evade, intention not to evade. When there is a contravention in the GST law, a penalty can be levied. If there is no contravention in the GST law, mens rea, we call a technical term called mens rea. So if there is no intention to evade, then the penalty under 129 cannot be invoked. I'll give you the citation of this judgment maybe by next class just for your academical interest. So here, please remember, law says that rejection is something which is possible for e-way bill. Now, these are the exceptions. Having said e-way bill is required, e-way bill is required, these are the exceptions where e-way bill is not required. Out of this, I'll give you few lists which is important for you to carry. First, conveyance used is non-motorized vehicle. Conveyance used is non-motorized vehicle. So if I use a bullock cart, if I use a bicycle, bicycle is not motorized, bullock cart is not motorized. Most of you, if you observe this market, they use this hand towing cart or a bullock cart for carrying the goods, steel, cement, or your commercial goods. So when it is caused, movement is caused using a non-motorized vehicle, e-way bill is not required. Then one more point. Goods transported as per notification 2 of 2017. 2 of 2017 deals with exempted goods. Deals with exempted goods. Other than de-oiled cake. If you carry de-oiled cake, then e-way bill is compulsory. De-oiled cake. Take example. So you have this palm oil seeds. When you extract the palm oil from the seeds, the cake which is left out as the residuary, that is called as a de-oiled cake. Though it is exempted under GST, for the purpose of Rule 138, only for the de-oiled cake which is exempted, e-way bill is compulsory. Examination, you can expect 1 mark MCQ from point clause B or clause E. Then clause G transactions. Transportation of goods which are treated as neither supply of goods nor supply of services under Schedule 3. I'm just touching the important aspects, students. Seven of 2017, this deals with your CSD, Central Stores Department. For military, navy, etc., you have that CSD stores. Any goods meant for CSD stores, or this is atomic energy for defense purpose. These are exempted under GST law. And this is one another case which would be tested in your examination. Goods are transported up to 20 kilometers from your business premises of the consignor for weighment purpose to the weighbridge and back, subject to condition that movement of goods is accompanied by a delivery challan. So generally, like example, say take example of steel scrap or any other scrap. I load entire scrap to the vehicle. Per kg, I'll charge 10 rupees. How do I know how many kgs? So what I'll do, I'll load all the scrap into the vehicle. I'll send this vehicle to the weighment bridge for weighing purpose. So when I have to send through a delivery challan, then bring it back using that delivery challan. Then no e-way bill would be required. Now, one consignment to be accompanied in multiple conveyances. This was continuation to Rule 55, which we have discussed in our previous class. I gave example of this windmill example. Windmill where truck 1, truck 2, truck 3, truck 4, truck 5. 5 trucks are carrying this particular consignment. What they say, delivery challan should be prepared for each of those consignment giving the reference of the invoice. So they say for truck 1, delivery challan, truck 2, delivery challan, truck 3, delivery challan, truck 4, delivery challan, truck 5 alone, the original tax invoice. Along with delivery challan, self-certified tax invoice, self-certified tax invoice, self-certified tax invoice, self-certified tax invoice. Also, they say e-way bill will be prepared giving reference to such delivery challan, each DC to have a self-attested invoice copy. So I'll prepare a e-way bill for truck 1. In the e-way bill, I give reference to this DC. In truck 2, again I'll prepare one more e-way bill. I'll give a reference to this DC. Please remember, students, delivery challan 1, 2, 3, 4 consecutive serial number. So I assign the delivery challan for each truck, and that delivery challan will be referred in my e-way bill. The last consignment to carry original invoice, e-way bill referring to invoice. In T5, I'll have original tax invoice plus e-way bill. This e-way bill will refer to this particular tax invoice. This is how I use for one consignment which is to be accommodated in multiple conveyances. This is what we need to understand. This is a bill to ship to model, bill to and ship to address, which are different. I'll give an example which is available here. A is in Maharashtra. He places an order to his supplier, vendor, Mr. B, who is there in Gujarat, for giving delivery of goods, movement of goods to Mr. C, who is in Uttar Pradesh. Here, A is the buyer who orders this vendor, Mr. B, saying that please give the delivery to Mr. C, who is there in UP. Now, probably the movement from A to C could be on account of supply or could be on account of job work. Either supply or job work. Assuming if it is meant for supply, A will bill to C. B will bill to A. Now question comes here. Who will prepare E-way bill? Is E-way bill prepared by A? Is E-way bill prepared by B? Is E-way bill prepared by C? Now this you will get a clarity. I'll move to the next slide to explain you this way. In case the middleman B is generating the E-way bill, what we will say, bill from Mr. B, who is there in Maharashtra, he will say, I'm billing from Maharashtra, dispatch from his particular place in Maharashtra, bill to Mr. A, assuming Mr. A is in Tamil Nadu, ship to Mr. C, who is there in, say, UP. So here, this B will say, from my factory, I am billing to this particular fellow, but I am giving a delivery ship to this particular details. And the details of invoice related to invoice 1, which is generated by Mr. P. This is how I use bill to ship to model. So this model I can adopt for sale in transit or job work purpose. Generally, most of this wholesale business, it so happens that, I'll just come back to my previous slide. Yeah. This particular model is like, say, B is a manufacturer. A happens to be a wholesale dealer. C happens to be a retailer. C is in, say, Tamil Nadu. B is in, say, Maharashtra. A is in, say, Gujarat. So here, C says, please supply material to me. A will say, please prepare the material ready to Mr. B. When the material is ready, A will pick the material from B and he will prepare an invoice to C and A will prepare an E-way bill, where A wants to hide the fact of Mr. B. Now this is how I manage my business, where bill from dispatch from bill to ship to model is adopted for supply. Now let's come to case 2. In case 2, A is generating E-way bill. Now what happens? Bill from, that is A, sorry, I'll just share my screen. Yeah. Now here, A is generating the E-way bill. So what I will do? A will say he is going to prepare the E-way bill. Dispatch from, he will mention the place of B. Bill to is Mr. C. Ship to is the address of Mr. C. Invoice details, invoice of Mr. A will be given. The profit made by A for the purchases made by B is kept silent. So this is how I prepare my bill to ship to model E-way bill. Now, here comes the why question. So all along you have been telling us prepare E-way bill, and no, these are the details you have to furnish. So what happens if I miss the E-way bill? So what happens? I don't know that E-way bill is required. So those cases, the GST law says that penalty under section 122 can be levied. Penalty under section 122 can be levied for rupees 10,000 or an amount equivalent to the tax evaded. Tax evaded, whichever is higher. Or contraventions under section 129 can be invoked. Generally, this is a post-mortem analysis. Section 122, simple penalty of 10,000. Section 129, rigorous penalty, which is equivalent to 2 times tax. 2 times tax. Now, section 122, this is post-mortem. That is, transaction already over. Transaction is completed. Like seller has sold the goods to buyer. After a 1 year or 6 months point in time, when the audit is being conducted, the officer asks, please give me the e-bill. Sir, I forgot. If you forgot, penalty under 122 can be levied. Penalty under 129 comes into picture where in transit, there is a interception where the GST officer catches you red-handed, where the proper officer gets hold of that conveyance which is in transit. Then 129 is applicable. So please keep in mind, I can be levied with penalty either under 122 if it is a post-mortem where transaction is already over, or under 129 which is a rigorous penalty. I can vehicle with the goods can also be confiscated as per the judgment of the officer under section 130. Now this is a extraneous case where the proper officer has stopped the vehicle. I'll give classic case example for you to remember this 130. Say, let's take example of Bhiwandi. Bhiwandi is a place in Rajasthan. From Bhiwandi, there is a bus which is coming to, let's take example of Patna. From Bhiwandi, there is a bus which is coming to Patna. This particular bus, there is a what you call textile load. You have piles of textile which is stored on top of the bus. Now, textile is taxable under GST law. When the proper officer has intercepted this vehicle, he asks the bus driver, where is the bill for this textile? The bus fellow runs away from the scene. There's a conductor. Proper officer catches hold of conductor. Where is the tax invoice for this particular textile? Conductor also tries to run away from the scene. Now, bus is there. On top of the bus, this textile load is there. What will the GST officer do? This is a clear-cut case of violation of GST provisions, where, like in customs law, we call something called smuggling. Smuggling is a technical name where I cause inward entry of goods without payment of customs duty. Similarly, under GST law, the movement of goods happen without payment of tax. Then this is called contravention under GST law. I call this as contravention under GST law. When contravention under GST law happened, my GST officer will confiscate the vehicle, and based on his judgment, he will auction. He will do the auction of the goods along with the vehicle. Reason? If the this particular bus fellow, etc., they were causing the movements, knowing that this is illegal activity, they will be put to simple imprisonment with fine. Not to get into this clutches, these people will run away. Then confiscation comes into picture. Let me see any doubts before I go further. Multimodal shipment means, Namrata, this is multi ways of transportation. Like example, say from Uttar Pradesh, consignment has to reach to Kerala. What you will do? From factory, say you will go to the nearest railway station. By road, from factory to the railway station, you will go by truck. Then you will give it to the railways. From on train, the goods carrier, it will start from Uttar Pradesh. It will reach Kerala. Once it reaches Kerala, from the railway station, again you will put onto the truck. You will take it to your factory. Multi-modal. Road to train, train back to road. This is one example of multi-modal. Namrata is asking, we can generate after midnight of 5th April 2023. Yes, ma'am. The example which I have given, if the validity is over, I can generate after 5th April 2023. How many days validity will be given? Based on this number of kilometers I mentioned, up to 200 kilometers, 1 day will be valid. In case of multi-dimensional cargo, over-dimensional cargo, for every 20 kilometers, 1 day will be valid. Equivalent to tax evaded means. I have a slide, Namrata. I'll explain you in detail what is that section 129 talks about. Now, overview of section 129. Section 129 is where I was telling it is a rigorous GST provision. It talks about detention, seizure, release of goods in transit. The provision says that where any person, when I say any person, seller, buyer, transporter, I have three parties in a transaction. Seller who cause movement of goods, buyer who cause movement of goods, or transporter who cause movement of goods. This person transports any goods. How does he transport? Transport or stores any goods while they are in transit. How he is transporting? In contravention of the jurisdiction, or this particular person stores any goods while they are in transit. The goods are in transit, and this storage is in contravention of GST provisions. So what do you mean by contravention? I gave this example of a bus which is carrying textile goods. There is a consignment of textile on the bus. What do you mean by contravention? So tax invoice is required. Without tax invoice, there is no tax invoice. The driver is carrying this particular consignment, knowing that this is an illegal supply. Most of the movies you would have watched, where the party says, यार नो ये बहुत मुश्किल का काम है, तो क्या दाम लगेगा, जितना भी मुश्किल का काम होगा, दाम पैसे ज्यादा देने से मैं करके दे दूंगा. So they say, I know that there is a threat. Knowing that there is a threat, knowing that there is a risk, I take this risk of transporting the goods. So here, whenever there is a contravention, and when I say contravention, I explain this contravention in simple this way. Contravention where there is existence of fraud or suppression or misrepresentation. Like example, fraud. I have to prepare a tax invoice. There is no tax invoice. There is no tax invoice. Suppression. The bus is carrying 100 bags, but the invoice is there only for 20 bags. I suppress the value. I suppress the quantity. Misrepresentation. I have packed cashew nut, but I have declared this is groundnut. Assuming cashew nut costs 800 per kg, whereas groundnut costs only 120 per kg. Now, there is a misrepresentation. So, when any of these three elements occur, I call this as a contravention. Transportation. While in transit, the goods are stored. Now, when you store the goods, you store not in a warehouse. Not in a warehouse. You store the goods in a house or in a particular place where you are not supposed to store the goods. It is not a warehouse. Then it is called contravention of storage. All such goods and conveyances, the provision say, all such goods and conveyance. Conveyance is your motor vehicle. Please remember, give a proper advice to your customers. Any vehicle which is used for this particular activity, used as a means for transportation, what they say, shall be liable for detention and seizure. So along with the goods, the vehicle also will be seized. Law says that the GST officer will catch hold of the vehicle, will also catch hold of this particular goods. And then he will take an action under section 129. So this is what my GST law talk about contravention under section 129. Contravention under section 129. So what happens? I know that there was a contravention. What will the GST officer do? In case if the goods are taxable, as I say, straight away 200% of the tax payable on the goods. Assuming that my value of supply is 1 lakh and my GST is at the rate of 18%. My GST happens to be 18,000. In this case, my penalty is equivalent to 18,000 into 2. That gives me 36,000. 36,000 I pay as penalty. Please keep in mind, any amount paid as penalty is not eligible for input tax credit. No ITC. Now, this is the most draconian GST provision. So, in case of exempted goods, what do you mean by exempted goods? Tea, oil, cake. Tea, oil, cake. In case of exempted goods, where bill of supply is not there or e-way bill is not prepared, law says 2% of the value of goods or 25,000, whichever is lower. Law government says if consignment is worth 1 lakh, 2% of this happens to be rupees 2,000. 2,000 or 25,000, whichever is lower, will be collected as penalty. This is in case of owner of the goods come forward for payment. Owner of the goods come forward for payment. So when the vehicle was stopped, whoever is owner comes, sir, galti ho gaya, maaf kar dena. जाने में बिना इनवॉइस या बिना ई-वे बिल हमने ट्रांसपोर्टेशन कर दिया, तो हमारा गलती को माफ कर दो बोल के if the owner comes forward, the penalty is lesser in this case. This is what 129 talks about. What if the owner doesn't come forward? Now, if the owner doesn't come forward, now that case, the law says 50% of the value of the goods or 200% of the tax, whichever is higher. Penalty is equal to maximum of 50% of the value of supply or 200% of tax, whichever is higher. Assuming 1 lakh, my value of supply is 1 lakh. On this, my GST happens to be 18%, is 18,000. So the provisions say maximum of 50,000 or 36,200 times, whichever is higher. Because this is higher, this will be paid as penalty. Sir, if goods are exempted, collect 5% of the goods value as penalty or 25,000, whichever is lower. This is what discussed in section 129. Now, basic forms. MVO 7 is a show cause notice. MVO 06 is an order. And principles of natural justice. Before issuing a show cause notice, before giving an order, they will follow the principles of natural justice. You explain your theory, and then they will do the order for that particular aspect. Now, I was giving example, vehicle will be detained. For releasing the vehicle, penalty imposed is rupees 1 lakh. So here, whenever there is a contravention, along with the goods, when the owner doesn't come forward, the vehicle will be released on payment of penalty of rupees 1 lakh, which is very, very severe provision wherever there is a contravention. Wherever there is a contravention. Under section 129. Then, from here, 138 A, B, C, D, E, F. There are 6 sub-rules which are incidental procedural to main rule called 138. 6 rules, out of which 138F is a recent amendment which came in August 2023. Examination, probably 138F is what would be tested in your examination. I'll see if there are any doubts before we go further. Rahim is asking this question. Can the original buyer and seller participate in the auction? Chori ka mahal. A very interesting question. I'll repeat this question for the benefit of other students. So can the original buyer and seller participate in the auction? चोरी का माल चोर auction में उठा के लेके जा रहा है. I'll give an example of this answer. I don't know how many of you have watched this movie. I repeat this example every session of mine because this is a classic example. There's a movie by name Badmash Company. Who's that hero? Shahid Kapoor. Shahid Kapoor happens to be a hero in this movie where they import a pair of shoe. First, one consignment will come, which is left leg shoe. When the consignment comes, this hero will go to the customs officer. They do the inspection. They say, "Sir, मैंने तो एक पेयर का शू ऑर्डर किया होता. मेरा सेलर ने गलती से खाली एक लेग का शू डिलीवरी किया हुआ है. तो मैं क्या करूंगा? सर, मुझे माल नहीं चाहिए." So when I abandon the goods, I as a importer, I say, I don't want to buy the goods. So here what happens? The customs officer will put it for auction. So this hero will not participate in the auction. Rather, his one of associate will participate in the auction. Uske baad, another consignment will come. What will happen to that another consignment? The second consignment is for a right leg. Again, one more fellow will go for this inspection, assessment. Sir, हमने तो एक पेयर का शू मंगवाया था, ये तो दूसरा पेयर का आ गया. Now, one happens in, say, Visakhapatnam. Another consignment comes to, say, your Mumbai. Now, both consignments where you go for auction, you buy that particular material, both you bring to Kerala, you do the assemble, and you sell. Now, what happens here? The Nike or Adidas, which is sold at a brand new showroom price of 1,200, you are selling it 1,000 rupees or say 800 rupees because you saved customs duty. Now, this is how uh, this movie, Badmash Company, talks about this import consignment. So, Rahim, I recollect this example, what you've asked. Generally, when the goods are confiscated, the purpose is neither of the owner or buyer have declared themselves as the owner. This is a orphan goods. So in auction, you can go as an anonymous bidder, and you can buy the goods. So that is pretty possible, right? Thanks, Namrata. I am trying to make this theory with examples to the extent possible for you to remember when you read this particular concepts. That is the intent. Rule 138A, documents and devices to be carried. Person in charge of a conveyance shall carry invoice or bill of supply, delivery challan, and a copy of e-waybill in physical form or e-waybill electronic form. Sorry. Section 68, read with Rule 138A. For goods movement, I need a tax invoice. If not tax invoice, bill of supply. If not these two, delivery challan. ब्रह्मा विष्णु महेश्वरा, इन तीनों के बिना ब्रह्मांड नहीं है. There is no universe. Similarly, when the goods cause movement, I have to either issue a tax invoice, I have to issue the bill of supply, or a delivery challan. Based on these three documents, I prepare something called e-waybill. So if this particular document is available in e-form, electronic form, that is also acceptable. This is in case of a person in charge of a conveyance should carry. Person in charge of a conveyance. Who is the person in charge of a conveyance? This is precisely a transporter. The law says that when there is an interception by the proper officer, these three documents are required. In case of import of goods, I think Rahim asked this question. Rahim, your question is answered here again. Huh? In case of imports, I have as a transporter, my bill of entry has to be carried along with the consignment. Number and date of bill of entry has to be furnished in e-waybill. They say that bill of entry along with that e-waybill has to be carried in my consignment. Invoice is reported to IRP under Rule 48. Rule 48, sub Rule 4, where a QR code is embedded with IRN available. Instead of a physical copy, electronic QR code is sufficient. The law says that whenever e-invoice is prepared, physical copy is not required. Electronic copy is good enough. So if you have an invoice where the QR code along with that 56 digits hash key is there, that is good enough for me to carry. I need not print this particular document. So if you're carrying on your mobile, that is a good enough document. One 138B. 138B talks about verification of documents and conveyance. Now, commissioner or any officer empowered by him may authorize the proper officer to intercept any conveyance to verify e-waybill in physical or electronic form. Please remember, Section 68 draws the power for the purpose of interception, and rules explain what is that they have to do. So they'll stop the vehicle and they'll say, look, I want to verify e-waybill. So if you say e-waybill is not required, then you have to give reasons. One of the reasons, say personal goods for say horse shifting. Say, let's assume that I stay in MG Road From MG Road, I shift to, say, Brigade Road. This is 16 kilometers away. When I use a truck for transportation, and those goods which are used in the truck are personal used goods. Personal used goods. As per Rule 138, Sub-Rule 14, there is an annexure. There is an annexure. Based on the annexure, personal use goods are exempted from carrying e-way bill. So what will the transporter will say? Sir, आप एक declaration दे दो, आप चिट्ठी लिख के दे दो कि ये आपका personal goods है, based on which e-way bill is not required. So this is what they are saying. So officer is interested to verify you're causing the movement of goods for transportation. Please show me e-way bill. Interception may be done for all intrastate, interstate movement. Physical verification of conveyance shall be carried out by the proper officer as authorized by commissioner. So verification of conveyance is a right to the proper officer. When the officer is stopping the vehicle, generally the client will call, sir, हमारा गाड़ी कोई officer ने पकड़ा हुआ है, क्या करें? So you will first and foremost say, ask the officer, why did he stop the vehicle? Sir, वो बोल रहा है कि ई-वे बिल चेक करना है. अच्छा. Ask the officer, does he have a ID card? Does he have authority? Sir, वो बोल रहे हैं, मैं शोकास नोटिस दे दूंगा, आके मिलो. Now we will say out of fear, चलो, उसका मैंने let him do his job. So he'll open the vehicle, he will verify the documents. If everything is okay, he'll let you go. If things are not okay, then he will issue a showcase notice in MVO 07. Now, this provision says that, so there, assuming, I'll give example this way. Say the seller is in Rajasthan, buyer is in Kerala. When the goods move from Rajasthan to Kerala, in between, let's assume that there is a state called Karnataka. There is a state called Tamil Nadu. Now, I'll explain the interception which happened in Karnataka. Goods entered Karnataka. Goods entered Karnataka. In District 1, there was a stopping of vehicle. Proper officer stopped the vehicle and said, yeah, I want to verify. I showed the documents. I moved further. I reached District 2. Again, the proper officer stopped. Some other officer. I want to verify. Again, I've showed. I moved further. District 3. Again, one more proper officer stopped. Now, said this is going to be a harassment. Now, here, law says that once a verification, inspection report, verification is done, and there is a form called INS 01. Inspection report is uploaded. Proper officer will not verify your consignment until and unless where there is information that there is an evasion of tax. On a specific information that there is an evasion of tax, physical verification of specific conveyance may be carried out after obtaining necessary approval from commissioner or other officer concerned. So here, if the proper officer has a doubt to believe he got a information, you are causing tax evasion, then when the goods are moving from one state within the state, unless and otherwise there is a special permission from the commissioner, the vehicle cannot be intercepted once again. This is what we need to understand. This inspection report, e-way bill 03, the officer will upload e-way bill 03 within 24 hours of inspection. How it will help? So, when the goods are moving from one state to another state, sir, already physical verification is done. Don't do once again the physical verification unless there is a tax evasion. Now, 138E, restriction on furnishing of e-way bill. I'll give an example this way. Seller, buyer, transporter. Seller is a regular taxpayer. There is no default. Every month, seller files a return, pays the tax legitimately. Buyer happens to be a habitual defaulter. Habitual defaulter. Now, when buyer happens to be a habitual defaulter, what he does, he collects the tax but not pays the tax. Collect but not pay tax. So here, government wants to teach a lesson to this buyer. In general, seller, buyer, transporter, any of these three parties can prepare e-way bill. So here, the GST law says that when the goods are moving from seller's location to buyer's location, where it is a B2B transaction, GST number of the buyer is there, GSTN of buyer is there, GSTIN of seller is there. Based on the GST number of the buyer, there is a blocking of e-way bill. Blocking of e-way bill. Why this blocking of e-way bill? Remember section 155? Burden of proof. Burden of proof. Where if it is a B2B transaction, this buyer wanted to claim input tax credit at the time of department audit under 65. Audit under section 65. When the input tax credit has to be claimed, section 16, which deals with your input tax credit, section 155, which says the buyer has a burden to prove that he is eligible for input tax credit. The assessing officer will say, show me where is the e-way bill. E-way bill cannot be prepared. Why e-way bill is not prepared? Because this buyer happens to be a habitual defaulter. So in case if seller wants to cause movement of goods to the buyer, instead of declaring as B2B, he will declare as B2C. When the declaration has been made as a B2C, for the purpose of section 155, this is not a valid proof. So here, government wanted to deny the benefit of input tax credit. Now, this is how my legal framework is happening under GST law. Now, point to take from here, all of you are listening to me. If you read this as a theory, you always get bored. When you read this theory from a policy point of view, assuming for a moment you get qualified as a chartered accountant, you are inducted by the Economic Advisory Board, who give advice to the Finance Ministry. The Finance Ministry's job is to collect taxes genuinely. You as an Economic Advisory Board, you examine the practical difficulties. You examine where there is a leakage in the system. Now your job is to advise, sir, make a policy such a fashion that you punish the habitual defaulter. How do you punish? You impose so many restrictions. If fail any of these conditions, don't give the benefit of input tax credit. If the ATC is not there, cost of operation is higher. There's a cash loss. So this is how you get the revenue in timely manner. This is what GST law teaches. Coming to 138E, my 138E says that no person, including consignor, consignee, transporter, courier agency, or e-commerce operator, shall be permitted to update Part A of e-way bill 1 in respect of outward movement of goods for a person who pays tax under Section 10 composition. Person paying tax under 2 of 2019, 6% GST, service provider paying tax under composition. Law क्या बोल रही है? This registered person has not furnished his GST CMP 08 for 2 consecutive quarters. 2 quarters GST returns file नहीं किया हुआ है. जीएसटी का पेमेंट नहीं हुआ है, then any of this consignor, consignee, transporter, courier or e-commerce, no one can prepare e-way bill. Other category persons, they are not punished any return for a consecutive period of 2 tax periods. Law says 2 consecutive quarters or 2 tax periods. Consecutive, that is month 1, month 2. In case of composition, quarter 1, quarter 2. 2 quarters रिटर्न फाइल नहीं हुआ, 2 महीने रिटर्न फाइल नहीं हुआ, then block your e-way bill. No one can generate e-way bill. Rule 138, not to furnish e-way bill. Also, when I say written, that is written under section 39, outward supply for any 2 months. GSTR 1 for 2 months or IFF for 2 quarters. If you are not furnished any of these two, your e-way bill is blocked. Or any person whose registration has been suspended, whose registration has been cancelled, then e-way bill cannot be allowed for generation. सर, कोई तो मौका होगा सुधारने का, कोई तो रास्ता होगा अनब्लॉक करने का. So they say, don't worry, I'll give an opportunity because you have made yourself good. Whatever default was there, 2 quarters you have defaulted, I have allowed you to file your returns. You have filed your returns, you paid your taxes. Then, using Form 05, I make an application for what? Unblocking the facility of generating e-way bill. In that case, the commissioner may permit to open the e-way bill or may reject the e-way bill for reasons mentioned therein. So the commissioner has the authority to either permit to allow filing e-way bill or non-generation of e-way bill. Students, this is the new provision which came in August 2023. Examination, May 2024, which is a new syllabus. Please expect one theory question based on 138F, probably for 2 months. One of the theory question, part of a theory question. 138F says information to be furnished in case of intra-state movement of gold, precious stone, that is your diamond, etc., and generation of e-way bill thereof. This I'll cut in generation thereof. Generally, under Rule 138, Sub-Rule 14, there is an annexure. As per this annexure, your gold and diamonds, gold and precious stone, there's a relaxation for e-way bill. Now, from August 2023, they say that the state can formulate rules in this regard. For consignment value exceeding rupees 2 lakhs. Please make a note, students. Please make a note of this 138F. Expect 1 2 marks question from your May 2024 attempt. As of today, provision was notified. None of the states have invoked this particular rule. They wanted to regulate jewelry and diamond business. Now, please keep in mind, I was giving the previous slide one example, economic advisory, consultant to economic advisory. So here, there is a scope for the GST where there is a tax evasion which is happening from this particular diamond and gold business. So a state specific only for intrastate, not interstate, because assuming for a moment, Tamil Nadu government has formulated a policy. There is a seller in Tamil Nadu. There is a buyer in Karnataka. This happens to be an interstate movement. Tamil Nadu has invoked rules. Karnataka has not invoked the rules. Then it so happens when the diamonds or gold move from Tamil Nadu to Karnataka, when there is no rule in Karnataka, it cannot be enforced. That's why they say only a particular state, whichever is interested, the state commissioner, in consultation with the principal chief commissioner of central GST, can regulate rules for invoking e-way bill provisions where the consignment value is over and above rupees 2 lakhs. This is what the basic theory which is required for you from your examination point of view. Let me see any doubts before we go further. Thanks for the compliment, Namrata. Rahim says, so then furniture shop misuse this. Furniture, which example, Rahim? I missed out now. Furniture shop misuse this. Which provision? I don't know. Which provision you're talking about? No interception. Namrata is asking, no interception within Karnataka, only in another state also. 138 D. Namrata is asking this question. Sir, मानते हैं कि in the state of Karnataka, there was an interception. I give an example. From Rajasthan, goods are meant for Kerala. In between Karnataka, there was an interception. There is a report called INS 01. Along with that, there is a form called EWB 03. Sir, officer has uploaded both the forms. Once the goods touch the state of Tamil Nadu, can the interception be done in the state of Tamil Nadu? My humble interpretation, Namrata, interception can be done. Reason, if there is a reason to believe by the Tamil Nadu state officer, in spite of inspection done at Karnataka, the officer can inspect the vehicle for genuineness of the goods carried in. Like we had this movie called Pushpa. It's a pan-India based movie where the red sandal smuggling happens. Now, just because inspection is done in one state, you cannot let go the vehicle free-handed in another states. Why? Probably the businessman with influence, he got an inspection report done in, say, Karnataka or, say, Rajasthan. The consignment started in Rajasthan. Inspection report was done in Rajasthan. The goods reached Karnataka. You cannot say, Papa, inspection वहाँ पे हो चुका है, आप दोबारा क्यों कर रहे हो? Sir, inspection is done in Karnataka. Don't do it in Tamil Nadu. Why should we leave the office, this businessman to travel, knowing that there is a loophole? So, law does not restrict that just because one place inspection is done, e-way bill 03 is uploaded. You cannot restrict the officer to stop. Acha, Rahim is asking this question. For personal use, furniture when shifting home, that no need to... Rahim, I got your point. Rahim is asking this question. Sir, आप बोल रहे हैं कि if there is a movement of goods for personal use, e-way bill का जरूरत नहीं है. It so happens that furniture shop person will cause movement of goods without e-way bill saying that this is for personal use. Now, the GST officer will say, you have sold the goods, you have paid the tax. I presume that this is concealment of information. When a sofa is sold for 1 lakh, definitely under GST law, e-way bill is required. Why have you not prepared e-way bill? Because you have not prepared e-way bill, the turnover what you have declared, I presume that this is a bogus invoice. Means, I'll put it in a crude and simple fashion, Rahim. Let me come to my slide to explain this. Let me, okay, I'll use this screen. Assuming there are, assuming there are 10 sofa sets. In month 1, 2 sets were sold. Month 2, 1 set was sold. And month 3, there is an opening stock of 7 sets. Section 67, inspection. Search, inspection, provisions. GST officer came for physical inspection. The inventory stock register shows that there is a 7 sets which are available. Month 1, you sold 2 sets for 2 lakh plus GST. Month 2, you sold another furniture for 1 lakh plus GST. Now, when you look at the invoice says that cost, insurance plus freight, that is door delivery, all inclusive. Now, the GST officer will say, see, under Rule 138, for sale, e-way bill is required. For sale, e-way bill is required. I presume that you made a sale of this item, you made a sale of this item without e-way bill. Probably this is a fake transaction. That means to say, you have these 2 units somewhere in your warehouse where you have concealed these items and you declared only 7 items. So I levy GST on 3 lakhs. I levy GST on 3 lakhs at the rate of 18% under 67 read with 73. This is how the interpretation can be made by GST officer. So because you want to sell and your documents prove that this is all door delivery business and assuming this is a B2B transaction, the GST officer has a reason to believe that this is a contravention of GST provision. सर ये कॉन्ट्रवेंशन नहीं है, मैंने ई-वे बिल क्यों नहीं बनाया? सर आई एम ignorant. Then you will give your transport bill. You give your transport bill where your LR copy and bank payment made to the transporter to prove that this is a genuine transaction. Why? To avoid penalty again, which is GST 18% on 3 lakh. Now, this is how things are going to be complicated, Rahim, if the furniture shop fellow without e-way bill is trying to sell the goods. So it's not that easy what we are hoping it will be. Hope this is clear, Rahim. Let me see if there are any other doubts. So far, so good. Students, we are at 9 o'clock. I have to start new chapter called Accounting Registers under GST. What I will do, this Saturday, as I said, we'll have a quick marathon of 5 chapters. I'll have MCQs. After the MCQs, I'll touch upon your accounting registers and records under GST law, read with one more topic called payment of taxes. Please come prepared for this small chapter called accounting registers and records under GST law. Also, what we have studied all along, just have a recap, test your knowledge. End of your institute material, you have this test your knowledge pages. Read those chapters and come prepared. Yeah. Till then, good night, goodbye. See you all.